What's going on, everyone? We have one more trading day left for the week, so let's make it a good one. Looking at the market for today, around 68% of stocks in the S&P 500 closed up in the green, and this is getting pretty exciting, especially considering that we have some crucial inflation data set to release 1 hour before the market opens tomorrow, and this is coming at a time where the market is still very close to its all-time highs, and we're starting to see some stocks like Nvidia reject in a pretty strong way. So I don't know about you guys, but I'm pretty excited to end the week with a bang, especially considering that the market will be closed on Monday.
Yeah, Mike, the market's going to be closed for Labor Day, so keep that in mind. There will be no trading on Monday, so there'll be an extended weekend. Be a little bit careful picking up some, riskier positions or something like that, holding them over the weekend with that extra day. But Monday is going to be nice and boring, Mike, but, next week should still be a pretty interesting week for us. I'm really interested in the SPY right now, especially considering how close it is to those all-time highs. Whenever we start to look at the SPY, we're very close to the all-time high, right around 565. Today, we touched the high of this week around 563.50 and rejected right back down again into the chop zone. I mean, look at this chop zone up here at the top. This is almost like a heartbeat monitor right now on the S&P 500. So, Mike, I know that, September is also historically not the best time for the market, and we're heading into that time literally as the market's at this high. So, I don't know, if there's a lot of fear that starts creeping into people's minds here, we might start to see a bit of a pullback for September.
No doubt, and we'll dive deeper into the historical statistics associated with September in just a second, but we have to talk more about the PCE data that is set to release tomorrow before open. So essentially, 1 hour before market open, inflation data will be released, and this is important because, the war against inflation has still not been won, at least as of yet, and depending on how this data comes in, it'll affect the rate cut path going forward. PCE data is actually Jerome Powell and the Federal Reserve's preferred inflation gauge, so it's expected to come in right around 0.2% tomorrow. But if we see the reading come in at, let's say, 0.3% or 0.4%, or I don't even want to say 0.5%, but if it comes in hot, that can change things in a pretty bad way. The main thing we want to see is the data to come in right in line with expectations, but if it is, I guess you could say, significantly over or below what's expected, expect some serious movement. So just be aware of this and keep your eyes peeled 1 hour before market open tomorrow.
Yeah, and even this morning, we saw the market move a little bit with the GDP data that came out this morning, and PCE data being the Fed's preferred inflation gauge is definitely a huge data point for the week and just, for the year, obviously, anytime we do get a reading like this. And, of course, we're saying it again, but it's coming right as the market is consolidating at, recent highs like the QQQ and the SPY. So, hey, if this data actually comes in and, let's say the market has a really positive reaction, who knows, Mike? We could open up tomorrow morning, maybe around 563.50 or even breaking it, and then getting closer to that all-time high. It could end up being a pretty solid end to the week. But obviously, this data, nobody really knows how it's going to come in. Obviously, people like to make a lot of guesses with it, but it's almost like guessing on earnings. And we learned with Nvidia today, guessing on earnings isn't the smartest thing to do out there.
As always, right? But, like you said, when you have important or volatile events, whether it be Nvidia earnings or PCE data or anything else, a lot of times we see big moves from that, and it's more so about reacting and positioning yourself in a smart, strategic way rather than trying to predict exactly what will happen. For example, if the market starts to rocket up tomorrow with some, good PCE data, then you probably won't want to be trying to fight that trend and, trying to short all of these big tech stocks that are just ripping to the upside, especially as they're so close to all-time highs. At the same time, if we see the PCE data come in hot and there's a lot of selling pressure that comes into the market, definitely be willing to adapt because you don't want to get ran over, especially considering that, Nvidia and some of these other big tech stocks are starting to get a good amount of selling pressure, at least in the short term. But as we look at Nvidia and some of these other big tech stocks right now, they will be so important to keep a very close eye on for multiple reasons. one of the most important reasons is the fact that big tech stocks basically control the market nowadays. When you have a stock like Nvidia down, let's say 6.5% on the day, that puts a lot of pressure on SPY in a bearish way, and it also just affects the market-wide sentiment. So as always, watch these big tech stocks closely, but considering Nvidia just reported earnings, it's still going to have a lot of volatility to it. And Tom, what would you say are some key levels for Nvidia for tomorrow?
Yeah, so looking at the chart right now, I'm really interested in this double bottom down here from yesterday, right at 115. That is going to be a major area of support. And if we actually go over to the Bookmap on Nvidia here, 115 is really major. You can see that as being one of these bigger red lines down here at the bottom where there was a lot of shares stacked up here, even in after hours. There's a lot of shares stacked at 115. So that is going to be a crucial spot to watch. If Nvidia ends up breaking below that, I'm going to become a pretty big bear on Nvidia in the short term. And of course, that is the low from after hours with those earnings as well. So that's where we saw it get bought right back up, Mike, and the Bookmap is there to support it. If it does end up recovering, though, there was a nice double top today, right around 124 to 125. So if I start to see like 125 break back up, then, we might start to see a recovery. And then that's where I'll adapt back up, maybe target like 128 to the upside after that. But that's the main levels I'm looking at for Nvidia. I really like 115 down there.
Sounds good. And then another thing worth keeping in mind with this analysis is also some historical statistics and seasonality with SPY/the market overall. As we look to the seasonality chart, we could see the period, I guess you could say, between like the end of August and the beginning of September tends to be a little bit slow and choppy. There's not too much action that happens around this specific time, but as we look at September as a whole, whether you look at it in terms of, the entire month over just election years or the past 10 years or past 20 years, or even if we go all the way back to 1950, like shown on this chart, you can see September tends to be a pretty weak period of the market. So again, we like to show these statistics ahead of time so you can be best prepared for, the weeks to come.
Yeah, exactly. And, I'm really glad that we have this one as well to kind of show, the overall movement with the market. Because what's interesting is in the middle of September, historically, we get a nice little pop there, right? That's kind of interesting. And then, towards the end, and as we saw on some of the data points that we've looked at this week, specifically the second half of September is like the worst 2-week time span out of the entire year. And you can kind of see that on the chart here, why that's the case. There's definitely a lot of downside pressure there as we get there. So just have an open mind in September, especially at the beginning and then towards the end. But whenever I'm looking at the SPY, Mike, it's like, there's so many things lining up right now. We have Nvidia down on earnings, which they killed it on their last report. On this one, we're not seeing as good of a reaction, combined with all the stuff at the Feds and the economy getting a little bit worse. It's like everything's lining up right now, right here at this high. So it's going to be a very interesting data reading tomorrow with the PCE to see if we can really get us to get out of this range.
Yeah, and you mentioned the economy getting worse. I saw some very interesting, what we'll call, things about the economy today. The first one being the fact that Dollar General, their stock is cratering, and that certainly doesn't say some great things about the economy. When Dollar General posts some, I guess you could say, dismal earnings and shows and says that the consumer or their core customers are feeling financially constrained, that certainly is not a great thing to see. At the same time, we are seeing companies like Affirm, which is a buy now, pay later company, their shares are surging and business is booming. So when you see these two data points, that tells you everything you have to know about the state of the economy. Buy now, pay later's soaring, and even Dollar General struggling. So take what you will from this.
Hey, the CEO of Dollar General, if you're listening out there right now, I got $1 million idea for you. Partner with the firm and do some buy now, pay later at Dollar General. You could pay later for your Chef Boyardee or something, but I don't know. But, at the end of the day, it's a very interesting move by Dollar General. And, personally, Dollar General, over the years, I've heard a lot of good things about them where people like to flock to them during some of these bad economic times because obviously, consumers are hurt more and etc. They want to save money at these cheaper outlets like Dollar General. But it's kind of interesting right now, Mike. We're seeing Dollar General tank off while we're seeing, I guess, other players out there like Costco and Walmart really killing it with consumers.
Yeah, very interesting trends, we can say, with the consumer. But another thing that we have to hit on, especially considering that Dollar General and Affirm just reported earnings, is that we have a couple other earnings stocks for the week, but to be realistic, they're not all that. So what's on the schedule?
Yeah, it looks like Frontline, Jinko, and MNSO. I'm not even going to try to pronounce some of those there, Mike, but pretty much nothing on the earnings side of things. I think really for tomorrow, the main thing to look at is going to be the PCE data. And of course, we'll have the nice earnings calendar out for next week on Sunday night's video. But I'm kind of glad, Mike, we get to just focus on this data in pre-market. We don't have to necessarily worry about, a big reaction out of Nvidia or something like that again.
You know it. And then before we get into tonight's setups, we have to take a look at SPY because, like you said, it is still stuck in the chop zone. And the price action intraday today certainly wasn't all that. There was a good amount of selling pressure that came in as the day went by. So what would you say are the key levels in both directions for tomorrow?
Yeah, the biggest levels here are 563.50, which was the high of day today. And then, of course, the low of this week right around 555. Those are going to be the two main levels to look for here, in my opinion. Other than that, SPY's just been chopping between there lately. So if we start to see 555 break down, I'll be looking at SPY in a more bearish way. And then if we start to break out above 563.50, we'll be pushing that all-time high right around 565. And that'll be an amazing thing to see if that starts to happen tomorrow. And that PCE data could make it do that. But in between there are a few supports here on the chart. But I think it's more important to mainly just look at the top and bottom ends of the zone because, you don't want to necessarily make a bunch of entries right between there considering there's all these reversals going on.
No doubt. So good stuff there. And let's jump right into some setups and predictions then. A stock I'm still watching very closely is Netflix, and it is to the downside. I talked about this stock in yesterday's video and about how it has a lot of resistance overhead, especially right around the $700 area. But Netflix is a big tech stock that has done very well over the past year, but there's, again, a lot of resistance overhead. And this is happening at a time where the market is starting to show some worrying signs, and we're heading into a seasonally weak time of the year. So when you combine all of those facts, plus with the recent lower highs that we've seen over the past couple of weeks, I definitely like the reward to risk playing in Netflix to the downside, and it would be awesome to see a retest, especially like at the $677 area as like the first level of support. If you wanted to get a little bit, I guess you could say closer, you could say like 680 or so, but that's like the first target given today's price action.
Yeah, it was cool to see it kind of bounce right around $700 today and hold below there. It's kind of interesting. It's at 700 while the SPY's right at resistance too, right? It's going hand in hand there, but it's definitely going to be a big level to keep your eyes on over the next couple days. With my first play, I'm looking at Goog in the short term to the downside as well. This was a stock that closed in the red today, and whenever we go to the heat map, it was pretty mixed for tech stocks. There was a few in the red, a lot were actually in the green, to believe it or not. Apple, Microsoft, Meta, etc. There was a pretty good gap this morning back to the upside, a slight gap. So I think that skewed the chart a little bit here. But whenever I'm looking at Goog in the short term, I'm really looking for another breakdown below the low of day today, right at 162 even. If we see that come in tomorrow, I'll keep looking at them down. They've been pretty weak here over the past couple weeks as well.
Looks good, and I like the setup as well. Another stock I'm continuing to watch closely is ExxonMobil, and it is in a bullish way. I know I talked about this one quite a bit earlier in the week, but the setup is still in play. ExxonMobil is a stock that has been continuously making higher lows over the past couple of weeks and months, which is great to see, and they have a lot to gain if we see oil prices rise due to increasing tensions and problems in the Middle East. Looking at ExxonMobil, ExxonMobil, it's at a point right now where it has not fully broken out, but it's getting closer and closer to doing that. And again, this is happening at a time where crude oil is at a pivotal point, and we are seeing not the best things in the Middle East. So either way, I really like the reward to risk playing ExxonMobil in a bullish way. But I will also say that ExxonMobil to the upside is not necessarily like a setup specifically for tomorrow. It's more of those. It's more like one of those setups that can take like a couple of weeks to develop, given how tied it is to the. I guess you could just say like the greater geopolitical environment.
Yeah, it's very interesting here. There's been a lot of consolidation on Exxon over the past few weeks, and I like how it's continuing to like hold the trend and, continuing to move higher here. I'll definitely be watching it for a potential breakout over the next couple weeks, maybe even a retest of those recent highs. So I'll definitely have it on the radar, Mike, that's for sure, especially with all the tensions out there. You never know whenever something could finally pop off. But with my next play, I'm looking at KO, and I just had to give KO some love here. Warren Buffett drinks Coke. I drink Coke. Who doesn't drink Coke? No, I'm just kidding. Coke's bad for you guys. Don't drink it. But no, it's flying up here. This is actually, it's reaching into the heavens, Mike. It's like one of the best daily charts I've seen in a while. But I'm just going to look for a continuation on this, looking for a rebreak of 72.20, even though the market pulled back today. KO prevailed, and at the end of the day, had another break of the recent high. Wait, let me double check. Is this the all-time high? Yes, it is. So brand new all-time highs as well here.
We can't forget that tomorrow is Warren Buffett's 94th birthday as well.
Oh.
So don't forget that. But good stuff there with Coca-Cola. And besides that, Tom, let's dive right into today's momentum plays. And with the first one, we have QQQ to the downside.
Yeah, the NASDAQ here is on a pretty big support. If they end up pulling under 469, then watch them down. And I'm really watching 469 because I like 470 as support, but we really want to make sure that there's a clear break there.
All right, with the next one, we have AVGO also to the downside.
Yeah, with AVGO, I'm watching 155 for a breakdown tomorrow, and once we break 155, I'll be targeting a couple levels to the downside. I did see a wick in pre-market after hours the other day, and I'm going to be watching that around 153, and then I'll be targeting 150 even under that. And I think that'll be a pretty major support, and we actually have a nice book map here to confirm some of these levels. So 155, the first level to break below, had some pretty decent buyers coming in there around the end of day today. And again, like I said, 153 was a pretty major level under there as well. So once you see the break, target 153, then 150. Shout out to Bookmap for the levels. I wouldn't have seen it without this, but I love 150 down there. If we break 155, we could definitely test that over the next day or so.
Sounds great. And then with the last one, we have Tesla for both directions.
TSLA, pretty wild today. Ran up this morning, then fell back off. If they end up breaking below 205, watch them to the downside. If they end up ripping back above 210, then watch them back up.
All right, so we have the upside level for a potential move higher, and then the downside level for a potential move lower with Tesla. Don't forget about the downside levels with AVGO and QQQ as well. But these three stocks are on potential watch list, you can say, for day trades tomorrow, if and only if they break through the levels Tom listed. The stronger and more consistent they move, the better the setups become. If they don't break the levels listed, then do not force the setups. But besides that, Tom, let's jump right into today's $586,000 big money trade, and we are looking at ticker symbol CRM. So today, CRM had some put options traded on them from the big money at the 240 strike for the October 11th of 2024 expiration. Looking at CRM, it got rejected in a major way off of earnings, which is certainly not a great sign. At the same time, the stock has been continuously making lower highs over the past couple of months, which is also not a good sign. And the market itself, like we've been saying, has a lot of heavy resistance overhead, and some big tech stocks, like specifically Nvidia, are putting some extra pressure on the market in a bearish way. Either way, the prospects of CRM falling are definitely there. My main concern with a big money trade like this one is how like these puts are somewhat far out of the money. They are the 240 strike for October 11th. So basically a trade like this one is definitely going to be like higher risk than normal, but at the same time, if we do see a true flush in the market, these puts definitely have some, exponential potential. But either way, it's definitely higher risk, and let's keep it close on watch going forward.
Yeah, it's interesting to see them pull back today as much as they did with earnings, Mike. I kind of thought that they were going to end up ripping out and end up really breaking out of this recent range, but they ended up pulling right back down once the market opened today, and it just was one of those wild earnings moves that kind of leaves me scratching my head, right? But I'm going to really be watching for a breakdown of this range here in the short term. There's a pretty good support that CRM is sitting on, and if we start to see some downside pressure over the next couple days and this support starts to give out, this put play could end up doing very well. Now, of course, there is a little bit of time to this, a couple months, so you got to keep that in mind as well. But overall, I like it for the next couple weeks, Mike, especially if this keeps rejecting with those earnings there. It was interesting that it couldn't hold higher after that initial move.
Yeah, it shows that there's a lot of selling pressure that came in a pretty strong way. So either way, keep this stock on your radar going forward. But I'm super excited to end the week. We have a lot of exciting moves just on the horizon, especially given the fact that Nvidia is doing its thing and bringing in a lot more volatility than usual. And it's kind of shaking things up a little bit, especially considering the fact that their earnings were pretty damn good, but the stock took quite the beating, and there's a lot of heavy resistance overhead. So I'm pretty excited to end this week strong.
Yeah, me too, Mike. And, I put the mean face up here because I know, with earnings doing well and the stock falling, I know that always makes traders really happy. So, yeah, it's a wild time whenever earnings do what they did, like with Nvidia. So definitely keep that in mind. And don't forget about the PCE data tomorrow morning as well, 1 hour before the market opens. Like we said, it's the Federal Reserve's preferred inflation gauge. That should cause quite a bit of volatility in the morning as well. We might actually, if it ends up causing enough of a move, we could see the market gap up or down in a pretty good way.
I'm glad you said that, because that's a great reminder to deploy smart, long-term, disciplined trading habits tomorrow. Let's make sure to follow the money and position ourselves in smart, strategic, disciplined ways. Any trade you enter should have a plan and stop loss associated with it. Don't just throw out and enter random trades and just hope for the best. Make sure to, have your risk managed, so even if the trade works against you, your loss will be kept to a minimum. So that's a key thing going into tomorrow. Let's trade in a smart, disciplined way. And Tom, we also have to give a giant shout out to today's member of the day, Leo, in the StockedUp Discord, who said chef's kiss with some meta put options today, and he definitely deserves some recognition. Thanks so much for being a great member of the StockedUp community, and keep up the great work going forward. If you guys are into short-term trading, definitely check out the StockedUp trading floor. We have a nice 100K subscriber special going on. Coupon code 100K saves you quite a bit with the yearly plan. Today was a really great day with our Surge bot, as it called out some Apple call options that ended up popping by around 117%. So if you're into short-term trading and you want access to all of our bots, whether it be Surge bot, Hybrid bot, SM bot, all of our bots, plus our live events, big money trades, you could chat with Tom and myself all day long and basically get access to everything you need as a short-term trader. Definitely check out that first link in the description and the comments down below. Again, coupon code 100K is our 100K subscriber special. So definitely check that out, because we're not going to run it for too much longer. But besides that, thank you all so much for watching, and let's end the week on a green note.